No, I ain't gonna do it. I ain't gonna buy degenerate long calls for the week. No, I'm not gonna do it. But if you were, it was definitely a brutal day. What started out to be a decent day, just like the bottom just fell off, guys. I mean, obviously, you're not watching the show if you have no idea what's happening. You have a pretty good idea what's happening if you took the heroic moment to glance at your portfolio today, but it has not been good. The Qs are down 2.25%. SPY is down 1.4%, testing the 50-day moving average. IWM is not even down 1%. Kind of crazy, right? Amazon fell off a cliff. Microsoft fell off a cliff. Apple was green. I don't know why Apple was green. Crypto fell off a cliff. What else is new? Ethereum fell off a cliff. BMNR fell off a cliff. Hood is continuing to fall off a crazy cliff over here. ZETA is down 10%. I can't really say what's going to happen, but software is not being appreciative. I can't really say what just happened. Software is obviously not being appreciated. ServiceNow is down 7% today. I don't know when this bloodbath's going to end, but it's getting kind of crazy. So I'm going to talk a little bit about some stuff that I did today, some moves that I did today. To be honest, I could tell you what I think is happening, but it's just going to follow the price, right? Narrative always follows price. Like, you're never going to know actually what's happening in the market. You're just going to know maybe a reason for it, but no one actually knows. It's just today's a day that a bunch of money managers and fund managers decided to just liquidate a lot of stuff. Probably a lot of margin calls and everything, but I think I have a good reason why things are very weak today, because that's what I can actually explain for the dynamics and the rotations that I'm seeing in the market. But I mean, some of this stuff, it's just SanDisk is up 2% today. Intel is up 20 basis points. Palantir had really good earnings, and they've been falling off a cliff lately. So, up 6% today isn't anything to argue about. iRed was green today for a long time. Nebius was green today as well. Those are recovering pretty nicely. But, on the other side of that, Hood is down like 5%. Why is that the case? I'll tell you the reason why that's the case, or at least what I think is the case lately. The RSP is only down 64 basis points. That is the equal weight SP 500. So you take all that concentration out of the mega caps, and it's equal weight for every single holding. So that's like, what is that? So that's 500 holdings. I think that's like 20 basis points for each stock in there, right? So, yeah, I mean, I'll sit here and give you exactly what I think it is, but I'm not going to lie. I think today was somewhat of a local bottom for now. The selling's are pretty egregious, but SPY does not want to close below the 50-day moving average, and that will mean a lot. It also does not want to close below the 50 EMA on the daily, right? And constructively, the monthly chart looks okay. It doesn't look bad, but it's well above the 9. Actually, I'll share the monthly charts. I've said the weekly chart and the monthly chart here with you guys. We have over here that SPY is it's above the 9 exponential moving average for the weekly, right? It's still above the 20 weekly moving average. It's still above. It's still looking pretty bullish. Like, this isn't a bearish chart for SPY at all, on the weekly when you zoom out, but Qs, it's bad, but like not nearly as bad. I mean, it's still above the 20 on the weekly. You could be a little bit better, but Qs have been lagging for some time. But Bitcoin is it's never been good for a long time. Like, look at this. It's below all the moving averages except for the 200 week. Okay. Like, crypto is falling off a cliff. Today's not a day where I'm buying crypto. Today's not a day where I'm buying crypto. Even on the monthly chart, like, crypto is just not looking good on a massive monthly downtrend. But on a monthly chart, the Qs look just fine, right? Qs look just fine. SPY especially looks fine. IWM is just killing it, right? Like, look, it's still got a green candle on the monthly. It's crazy when you think about it. Like, is this an outlandish sell-off? No, it's only targeted at specific things with high debts. IWM is made up of lots of things. It's not just non-profitable small cap. It's a lot of regional banks, a lot of financials and everything, which are doing pretty well, industrials and so on. Obviously the tech-heavy Qs is where all of that concentration lies on, especially the software. So that's the reason why Q is getting hit the most. But I don't think the market's ready to roll over yet. You know, with that being said, only at the high conviction, guys. I'm not here to try to preach you penny stocks that are going to go to the moon. I'm here to be realistic with you guys. I'm not going to tell you something's going to go up tomorrow because no one knows. We just know the probability of that happening. And what we practice here is probabilities, right? We're not active day traders or anything, but we do things that we need to do whenever we need to hedge a portfolio. Look at that, ZETA is recovering pretty nicely there. I'll get a little bit into things that I did today, things that I am looking to do. Mic check 1 2. Mic check 1 2. Is my mic bad? All right, let me know in the chat. ZETA is getting hit. Well, I don't think getting hit is the correct term for it. I think it's getting murked. ZETA is getting handled right now. It's a little faded. All right, let me try that out. I made it a little bit louder. Let's see how that's going. Yeah, ZETA is getting wrecked. Okay, guys, I know ZETA is getting wrecked. ZETA is getting wrecked. But, you know, we don't take action without hedging to downside if something's in free fall, right? Like this is a super risky chart. The monthly is not so bad. The monthly actually looks a lot better than the other charts. The daily is a super risky chart. ZETA is here below the 200-day moving average. And I added yesterday at 1860, right? And look what we were doing here. We were below the 100-day moving average and so on, but like we were back in the range, right? I didn't think this was going to happen, but you know, when you have Microsoft and the Qs and IGV down like 3%, like IGV is just falling off a cliff here. Like, is this a chart of service now, or is this an all-encompassing software ETF over here? You know, let me check the mic real quick here. Let me check this out. Yeah, I think we're going to get a little bit of a bounce here and probably a little bit of a bounce fall through tomorrow. Wow. Hold on one sec. Wow. All right, apologies. I'm fixing it. All right, that should be fixed. That should be a lot better, guys. Just fixed it. So yeah, that should be good. Should be good. I was not on this microphone the whole time. I was on my stupid laptop microphone. Okay, so you know, markets are coming back here a little bit. I mean, I could sit here and tell you the fundamentals of ZETA all day long, but the market doesn't care when it's selling off software stocks. Like it just doesn't care. Like Palantir is lucky to be green, and it's not because they don't deserve it. Like they certainly did. Palantir needs to be like 15% up today. That was a phenomenal earnings report yesterday. But it's software stocks are getting murked, and Palantir falls in that bucket. So it's still up 6%. Like that is amazing, right? But software is not a place to be today, and ZETA is in software. ServiceNow is down bad. IGV is down bad. Yeah, we're ServiceNow at. Yeah, ServiceNow is just getting decimated. Snowflake is, wow, Snowflake is at 171. That's probably more to do with Palantir having explosive earnings, though. Let's look at these Iran reports earnings on Thursday. That's going to be with Amit. I'm going to be doing that stream with hopefully because that's when Amazon reports. So I'm going to hit up my beautiful Indian friend, see if we can get something going on there. Again, if you guys were there last Sunday, 2 days ago, you definitely had a great time kicking it off with all of us. We all stay true. We all stay real. We aren't fake people. We're not here to basically pump penny stocks. We're here to tell you the truth, whether you like it or not. And I will tell you the truth. I'm not going to lie to you. You know, overall, the market doesn't look like it's about ready to fall off a cliff. It looks like we're still in this massive range here since October 10. Like, look at this, like October 10. Wait, that's not October 10. This is October 10, right? Like we're still trading higher than that, but like this has just been chopped since October 10. Like this doesn't look like it's going to be an all up market like it was basically for 3 months. This looks like this is still in chop mode. super chop mode. SPY is obviously a lot better. You know, it's a lot higher, but like it's just been this, you know, but it's been doing good because the S&P 500 is made up of a lot of other companies besides the tech companies, and mostly companies that are producing a lot of cash flows that don't really care about debt. But the high debt companies, the ones that are just burning cash left and right, like OpenAI, I'm actually surprised a lot of these data center stocks are doing good today. But there's lots of companies out there that are just in a massive downtrend that are just constantly needing to borrow cash. I mean, like Navitas is actually a company I'm pretty bullish on, but their profitability profile is pretty nasty, so it's not going to do too good. You also have Indie Semiconductors back below $4. That's also part of the secular trend with AI, but it's not doing good. SMCI keeps on promising great quarters ahead of it, but we don't know how long a lot of their clients are going to last for and how much money they're going to have to borrow. So it becomes a question as to whether those services that are going to come up to them are going to continue accelerating, and more importantly, whether that low margin business will be able to continue producing heavy cash flows, right? They can still make the top line, but if they're still low margin and shrinking margins, it's just not going to be good for them at all. Broadcom, this is down 6% today, and it's coming up to 2. Sorry about that. I have something going on. Okay, this is down 6% today, and to be honest, anything that touches OpenAI is getting killed. The market does not believe in OpenAI, and I don't think OpenAI is necessarily the problem. I think the problem is the debt, right? The amount of debt, but it's not just the debt; it's the cost of that debt. It's not going to be as cheap as it was before, right? Like it's going to come to an end at some point. But more importantly, is OpenAI going to be profitable, right? So it's all like a massive domino effect. If OpenAI can't pay its bills, that's going to affect your Microsofts. That's going to affect your Broadcoms. That's going to affect your Oracles, which is at $150. Just keeps going down. It's going to affect a lot of those, right? And I'm going to play this clip for you with Jensen Huang. You guys probably saw with Ahmed this morning, but you guys should watch this clip again. Like Jensen Huang is just not for OpenAI anymore. And you heard it. If you saw that clip yesterday, I'll play the whole clip right here for you guys. And look at it yourself. Listen to it yourself. Let me know what you think in the chat. If you think if you would invest in OpenAI if you were Jensen Huang.
Again.
Sure.
So yesterday you said that the NVIDIA is not going to invest as much as $100 billion in OpenAI.
No,
for the current run.
We never said we were going to invest $100 billion in one round. That never was said.
But how about the overall commitment? Because last September you and OpenAI.
There was never a commitment. It was if they invited us to. So let's start over again. They invited us to invest up to $100 billion, and of course we were very happy and honored that they invited us. But we will invest one step at a time.
All right, but is that overall commitment still stands, or it's not a commitment?
I told you just now. Okay. Yeah, you keep putting words in my mouth. Okay. It's not.
Sorry about
that. Yeah. I know that. Yeah. They invited us to invest up to $100 billion. And we are honored that they invited us. We will consider each round one at a time. Yeah.
I could have sworn there was more to that. But, you don't mess with the Jensen, all right? And Sam Altman definitely did. He got greedy. He wanted to do business with everyone. And he forgot who his main supplier was, and that was Jensen Huang, NVIDIA. And he went back there and he got greedy. We kind of knew it was going to happen at some point. The fact that he was like literally turning a company that's devoted to democratizing AI for the entire world and making sure it doesn't become an evil entity, the one that Elon Musk originally started. Sam Altman came in here and he wanted to be rich and he got greedy, and you saw him in his Lambos. You saw him talk up his company, telling Brad Gerstner, like, look, we'll find you a buyer. We don't care about you, sort of thing. He made deals with NVIDIA, and then he turned around and made deals with AMD. And it goes to question, like, look at it this way. If Iran said, we're no longer going to be solely doing NVIDIA GPUs and we're going to start pumping out AMD GPUs, you think Jensen Huang's going to keep them as a preferred customer, a preferred cloud customer? No. They're going to get tapped, and Jensen Huang's going to be on there with the co-CEOs, and he's going to be like, these guys are going down, right? So once these companies do that, like that's a big shot in the face for them. But especially when you're as big as OpenAI, like you don't cross Jensen, right? Like you saw that press release, and this was Ahmed was saying earlier, and he's totally right. You saw that press release, that NVIDIA release, where it's like, happy for you, AMD. Actually, Chris Patel did put up. I think it did put up that GIF where it was, or the meme of the kid who was like mad and everything, but it said like happy for you, whatever, right? And that's what it was. That Jensen was not happy about it, and it just seems like it has not been doing well for them, and like that was kind of the last straw. I was offered to join a round in OpenAI, and it was not early. It was probably like around a $300 billion valuation. And I'm like, no way. Why would I invest in OpenAI where I could buy some great companies on the cheap and probably make a lot more in the public markets than I can and just buying and holding that stuff? And of course, you have like millions of dollars of capital. Like that might make sense to throw 100K at it or something. But like, I don't know. I can make more money in the markets instead of like doing something like that. Plus, that's going to lock up your liquidity, and you won't even be able to get out when they IPO for like 60 days or whatever. But yeah, why doesn't Jensen buy Micron? Why didn't he? He probably had an opportunity to do it, but decided not to. I mean, let's remember, Micron had this explosive growth in the last few months, which I'm sure Jensen Huang knew was going to come. But a lot of these companies, they're part of their own supply chain, and they have their own board and shareholders, and look, like they have to sign for it. So maybe the question came across the table, and maybe Micron and the board was like, no, thank you. We're going to do just fine by ourselves. And that's completely okay, right? That's completely okay. Micron is 40% of the bill of material, actually high bandwidth memory is 40% of the bill of materials to build out these GPUs. So I think it wasn't really a question of whether they should sell them or not, but definitely do more business. And Micron certainly has continued to do large business with NVIDIA. NVIDIA is literally dictating where the AI supply chain is going. And NVIDIA and Trump are obviously trying to onshore all of that, which is the reason why a lot of these stocks that I own have a lot to do with onshoring. Oh, we're getting a nice little recovery here in some positions I have. We're getting a nice little recovery here in ZETA. Let's see if it recovers at 200-day moving average. We're getting a nice little recovery on semiconductor. Could be better. ENS just not go down. Like this stock just not go down. Getting a nice recovery. Nebius, nice recovery in Iran for Thursday. The Qs, maybe not so much, and that's likely because is Microsoft still falling off a cliff here? Because you always got to look at the mega caps when you look at these other stocks. Microsoft is still falling off a cliff here. Not too great. Meta, well, here we are. We're like about to fill that gap, coming back below the 200-day moving average. So that's a pretty nice inflection point for Meta. The mega caps are all 3% down today or more, besides Tesla and Apple. Apple went red again. Google is only down 1.5%. This is the reason why the Qs are down, because it's so heavily concentrated. And this is the reason why the market's down. If the market's down this much, the mega caps have to be red. Like there's just no way. You're talking about like collectively $20 trillion plus of capital or a market cap down collectively around 4%. So, that's going to bring down the market. It's going to bring down the market for sure. And we're not going to get a meaningful recovery unless these start to recover. So, we can do this without one or two of these guys, but we certainly can't do it without all of them. And all of the mega caps are red. Apple, Amazon, Google, Meta, Microsoft, Netflix, NVIDIA, and Tesla. NVIDIA is down almost 4.5%. It was down as much as 176. So that would be about 5%, maybe a little bit less. But yeah, NVIDIA is definitely down. So I think this really begs the question of where are the markets going to go from here? Well, I'll tell you one thing. The the markets don't care about crypto. So I don't think we're going to get a crypto bottom until we see some fundamental recovery in monetary policy, and that's not going to be happening, at least for now. We got Warsh coming through the door. So we need to see some positive momentum there. Warsh never publicly spoke yet, and I think a lot of it has to do with the fact that he is still a nominee. But in due time, we're going to start getting some clarity in exactly what Kevin Warsh, who is the nominee for the new Fed chair, things that he has to say. Like, is he going to cut rates? Is he going to hike rates? But more importantly, guys, is he going to expand the Fed balance sheet, or is he going to reduce it? I gave a long talk about this yesterday on the show. It was like the whole stream where I was talking about how monetary policy works when it comes to cutting rates, hiking rates, and Federal Reserve balance sheets management. And guys, that's the big picture here, because if you do not do QE, that is fine. But if you say you're not doing QE, that's a lot worse. The market won't move for what you're doing right now. The market will move for what you are going to do. And you've seen it, right? You've seen it across stocks. You've seen it across the stock market. You've seen it across currencies. You've seen it across precious metals and especially crypto. And if we don't expand the Fed balance sheet, crypto will fall off a cliff. And the market, or at least crypto, looks like it has made its decision that we are not going to expand the balance sheet to QA infinity anymore. We are going to probably do it for a little bit longer, but it's not going to be that dramatic $5 trillion plus expansion of the Fed balance sheet of just printing money anymore. I think those times are done, and they've been done for 6 years, and they're not going to come back unless we get some sort of catastrophe or apocalypse. Not a SaaS apocalypse, but an apocalypse. And that was in the cards for Kevin Warsh. He's commented on that many times where, look, he's not someone who exactly goes out there and is like uber dovish and will like do whatever he can to keep stocks at all-time highs. He's going to base it off real data. And he's also going to see that the data is actually fine. So as they say in IT, if it's not broken, don't fix it. Why? Are things broken? No, the market's at all-time highs. Are there people starving in the street? Of course there are. But the question is, who's really suffering on the street? Well, I'll tell you something. The lower class and everyone below the middle class is definitely suffering. I wouldn't say like suffering where they're chewing half-eaten chicken dinners from the garbage. But if we continue on this K-shaped economy path, like it will probably head there. There will be political anarchy and riots everywhere. So that needs to stop. It needs to stop. And I think that of all the candidates out there, Kevin Warsh is the best one when it comes to managing that K-shaped economy. And I think that it would be good for stocks in the long run. I just don't think that time is right now for stocks, for high beta stocks that are producing no cash flows or profitability. I actually typed up this long excerpt over here, and I'll probably put it out later on Twitter, but I'll give it to you guys first. But I will read this, and let me just stop sharing my screen. I'm not sharing my screen. I'm just going to read this, and I'll post it on Twitter later on. But here is why the market is in free fall today. Short-term pain usually comes before long-term gain, especially when monetary discipline takes priority. Monetary policy matters more than narratives, and liquidity ultimately dictates asset prices. Kevin Warsh's monetary framework is structurally hawkish, favoring tighter financial conditions, balance sheet discipline, and little tolerance for persistent inflation. That keeps rates higher for longer, pressuring software companies dependent on cheap debt and long-duration cash flows like ServiceNow or Snowflake or MongoDB or Salesforce CRM, while also compressing multiples across high beta liquidity-driven trades such as the QQQ, or of course, all of your debt issuing companies out there. This impact extends into mega caps as well. Microsoft is highly levered with OpenAI, which continues to burn significant capital, and that funding demand ripples through the ecosystem to large fabless and infrastructure beneficiaries like AMD, Broadcom, and Oracle, like I just showed you charts of. Where capital intensify and financing costs matter more are in tighter rate regimes. A shrinking Fed balance sheet is also supportive of the US dollar. A stronger DXY is typically bearish for paired currencies and creates headwinds for precious metals, making gold and silver less attractive in this environment and weighing on GLD and SLV until policy or liquidity conditions shift. Okay. And if we are going to get a new chair that is coming in and will shift more of that policy, there might be a lot of pain ahead. But this is all based on what the market thinks Kevin Warsh is going to do. Has the dude came out on a podium and said what he's going to do? No, right? So it's uncertain what he's going to say. Now, what if he says, I'm going to let things stand the way they are, and I'm going to sit on my hands for another year and see where things go, and then I'll make a decision. The market is probably going to rally, right? If he doesn't make dramatic changes. And it's very likely he's not going to make dramatic changes immediately. He's probably going to wait for a little bit, or maybe he's looking at it right now, whatever. But I don't think he's going to go in there and be like, we are slashing rates 50 basis points, which people think are bullish. But if he says that they are going to let bonds roll off the balance sheet again, that's worse, okay? I don't care what you say, 3% rates, but taking off $50 billion off of the balance sheet is a lot worse for markets than you think it is, right? So he's probably not going to do that. In fact, I think it's getting a little bit, the narrative's getting a little bit out of hand, but the market loves to sell off in uncertain conditions, and this is a lot of uncertainty right now. Mind you, we are in the middle of a massive AI revolution. So you have two things happening. You have deflationary forces, but you also have a pause in expansive monetary policy. So the market doesn't know where to go. So it just does this the whole time, right? And that's basically where we've been. We've been doing this for 4 months already. And we can continue doing that while software stocks sell off. We have been. Software stocks have been selling up for months, and we're sitting near all-time highs. It can continue happening. It doesn't say it needs to happen because not everything is down, guys. Not everything is down in the stock market. There are a lot of things that are up in the stock market. Let me bring up this the S&P 500 sectors. Oh my God, this guy. Yeah. Thanks for ditching me. Damn. Anyways, no, that's just the joke. That I think this is one of my homies out there. Yeah, shout out to my homie out there. Let me take a look at this right here. Geez, time flies by when I just like spit fire. All right, so okay, financials are down, consumer discretionary is down, which is 20% Amazon, 20% Tesla, right? XLV or healthcare is down. It's actually been in a nasty downtrend for quite some time. Well, not quite some time, but basically chopping around. Tech heavy, of course, this is going to be the game changer right here to the downside. Not as low as last October. Actually, no, this is lower than last October. Not as low as last November, but this is mostly NVIDIA and Apple and Microsoft, guys. So this is continuing to push those lows in here. But staples is people want to buy toilet paper. People want to buy sticky notes from 3M. People want to buy soup from Campbell's Noodle Soup. People want to buy paper towels and all that stuff. People want to go to Walmart, whatever it is. People want to buy staples. Industrials and basic materials involved for semiconductors and building factories is up. Energy is doing good, mostly comprised of energy stocks, not oil, not crude oil, but the stocks that profit off of it, right? These guys are literally like pumping their factories right now because they know that oil is historically low and then it's going to be back up there. Utilities, rate sensitive companies are doing very well right now. Power generation companies, P&G, all those companies doing good. Real estate, And we got about 20% of Google and 20% of Meta in XLC communications. Guys, this is not a massive bear market. This does not look like a market that's going to fall off a cliff. This looks like a massive rotation. And the rotation, unfortunately, is coming out of tech. So, stay frosty, my friends. And we got ZETA back at 1720. If ZETA can recover this 200-day moving average by the end of the day, that would be phenomenal. That would be phenomenal. What's going on, Ray? What's going on, June? Ray, thank you for great seeing you there at the event on Sunday. I thought I saw Uzi there too, right? Uzi, were you there? I don't know if you were there. I think you were there, right? I think I remember seeing you. But if you were not there, there were a lot of people talking about you while we were there. They were not talking good. I'm just kidding around. Those are the only good things to say about you, dude. Yeah, I'm going to go back to this comment earlier. ZETA is getting wrecked. I mean, even though it's like bounced a little bit here, 8% down is no joke. It's hurting, guys. It's hurting. But I mean, this morning, you guys saw that I bought ZETA. Probably I was like basically the top call on ZETA yesterday. I bought 2,000 shares of ZETA yesterday. But I'll tell you what I did this morning. I sold cover calls against those 2,000 shares, and I also bought puts in ZETA that are extremely cheap. And when you're down 10% in the day, things can go pretty good. And I said I was doing this in Twitter. I have like one of those subscriptions on Twitter. I feel like, I've had that for some time. So like I want to shoot those guys some a little bit of alpha when I'm doing in real time. Like obviously I can't be live 24/7 tell you guys what I'm doing. But go ahead and follow me on Twitter. I mean, like I kind of like say what I'm doing all the time without actually saying it out loud, but I don't know. I'll probably open that up at some point. Just not right now because I still have it open. There's some people who are still sub to that one. But yeah, so I mean, it was pretty remarkable because I did not time it correctly. I actually, let's see here. I posted it earlier. Let me share the screen. And mind you, this is very short term, so you don't even need to pay attention to this stuff. But I'm pretty active in markets when we get huge volatility swings. When we're not having massive volatility swings, I'm not really that active in markets. I mean, for the first like 3 weeks, I barely did anything. But yeah, I posted this. I have a large ZETA position, but with that, the baby is thrown out with the bathwater. Like ServiceNow is just on a massive downtrend. Doesn't make sense to me. So it's time to hedge. You need a small loss in case software goes more south and it leads to pulling back, right? So I bought the weekly puts for ZETA. They're only 40 cents, and I basically bought one put per 100 shares that I own. And then as I started to see more weakness in semiconductors, this is when NVIDIA was not down that much. I ended up opening a 5% position in the 3 times inverse SOX ETF. And I actually closed 7% of my SOX position. I'm going to see how things end up today in the market. And if things recover a bit, then I'm probably going to close the last 30%, but I locked in a pretty decent gain there and the puts paid out. So, I mean, it was a great trade, but guys, like this is not sustainable. I'm not like an super active day trader. I just do what I can to capitalize off of irrationality in the markets. And today was a pretty irrational day. Like when you see sell-offs like this, it's kind of irrational. Like the market's not thinking right now. And when it's not thinking right, it sells off everything. And it's not selling off everything. Like, again, this isn't a massive sell-off, whatever, but like it's clearly hitting software. So I have to hedge the largest position to reduce drawdown. And I took those, I took the profit off. I made those. And I threw a lot of it into ZETA leaps for 2027, $15 strikes. So I could be wrong, but as far as I'm concerned, that's free money. That's free trade for me because I already made the money on it. So, if it goes to zero, well, then of course I'm down because that was used to buy call positions or leaps. But I don't think I'm wrong with ZETA. I don't think I'm wrong at all. And I think that this is getting unjustifiably crucified because of the software sell-offs, which usually happens, right? That's why we saw Facebook at $80 back in 2022. It got unjustifiably crucified. And that's why we had many opportunities in the market. Am I buying? Someone asked if I'm buying Microsoft. Like, no, I used to own Microsoft and actually sold it almost more than a year ago at like $430. I'm not interested in buying Microsoft. I think there's way better plays than buying a mega cap. Is Microsoft going anywhere? Absolutely not. Microsoft is not going anywhere. It's a $3 trillion plus company, and they basically invented the SaaS model along with Salesforce. And they're mega cap. They're the second largest hyperscale in the entire world. They build a staple application, every single enterprise, Microsoft Office and productivity. and they're growing Azure at 39% year over year. And yeah, okay, fine. They have a lot of things with OpenAI, but guys, I don't think OpenAI is going out of business. I don't. I'm sorry. I don't buy into this crazy narrative. It's getting a little too crazy. People are treating it OpenAI as if they're going out of business. They're just hitting a major bump in the road. But let's be honest, OpenAI controls 60% of the global AI traffic. They are not going anywhere anytime soon, or at least until Google comes back and takes some of that market share back. All right. So what else do we got going on today? I already talked about the crypto slaughterhouse. I already talked about Jensen saying no to Sam Altman. I already talked about being bullish as hell ZETA. I already talked about where do we go from here. Actually, I could talk a little bit more about that. But we received some like really good news about ZETA. I don't think it's like, it doesn't really change the fundamentals, but it's just, I mean, I see things happening in the markets. I see things happening with Wall Street analysts. I see things about, people talking. Yeah, a lot of people talk about ZETA, which is cool. I do like the fact that, a lot of people talk about ZETA. A lot of people like ZETA. But people are like, oh, well, you get like a lot of people on Twitter talking about ZETA. That must mean that's like a pump and dump. It's like, what am I pumping, guys? Like, I don't have a multi-million-dollar position on ZETA. Like if ZETA falls, like I'm not going to die because I positioned it correctly. It would suck, but it's not going to die. Like I don't really have a lot to lose if ZETA goes to zero, but it is not going to go to zero. It is not going to go to zero. My boy, Ronnie Coleman, not Ronnie Coleman, Ronnie V. I think that's his new nickname, Ronnie Coleman. Who is Ronnie Coleman, actually? Why does that sound familiar? This is Ronnie Coleman. Sometimes these like things run in my head and my brain moves like a mile a minute. So I don't know what my brain is thinking about before I actually realize what it's thinking about. And like, I just called him Ronnie Coleman and I was like, why does it sound so familiar? It's like, this is right. Most legendary bodybuilder in the entire world besides Arnold Schwarzenegger. Yeah. Ronnie V is definitely not Ronnie Coleman. But I mean, yeah, the dude's got delts. So shout out to you, Ronnie. I hope you're watching someday. Yeah, that's right. No homes though. No homes, but dude, you got some pretty crazy delts. If I recall, actually, I think Ron was in the, did do some service for America. So shout out to you, Ron. Thank you very much for your service. Lightweight, baby. Lightweight. Ain't nothing but what does he say? Ain't nothing but ain't nothing. He always says something in those videos where he's like lifted. Ain't nothing but a peanut. Ain't nothing but a peanut. Yep. Lightweight, baby. All right. So this dude bought Leaps. I also bought Leaps as well. But Ronnie, shout out to Ronnie. I'm gonna put his Twitter right there in case you guys want to follow Ronnie Boy. He spits some fire on Twitter, guys. I would highly recommend following him. He does a lot of trades. He's got his own service and stuff. I'm not trying to pump his trader service, but giving credit where it should be. Oh, it looks like he actually streamed this morning. He does stream quite a lot. Oh, this is funny. PayPal. That's funny. Everyone's SHITing on PayPal this morning, and I feel bad. I feel bad for PayPal shareholders because there's a lot of them who are no longer PayPal shareholders. Breaking news. Barron reports that Dan Ives has been an advisor to ZETA Global since the end of 2025. Okay, so, I mean, we kind of saw it coming. He's talking about ZETA a lot. He had a fireside chat with David A. Steinberg, the CEO. Like, come on, it was going to happen at some point. All right. Like, we kind of knew it was going to happen. He's an advisor on the board. All right, guys, let's not hide this. Dan Ives is one of the most famous analysts on Wall Street, part of Wedbush, which is arguably one of the most popular sell-side analysts companies in the entire world, globally, around the entire world. A lot of people listen to him. A lot of people make moves off of him, not just retail traders, but also big shops, hedge fund shops, fund managers. They make moves based on what he recommends. And he's recommending ZETA. And that should not go unrecognized. So, that doesn't mean it's going to go up. It just means that, well, his reputation's on the line. He's pretty popular. Would he throw his reputation away by betting on a stock that he doesn't think will go up? Probably not, right? He's been long Palantir. Remember when he did that $25 Palantir upgrade, and everyone was like, "Whoa!" And then Ahmed had that Spaces with them on Twitter. Like, shout out to the OGs who were listening to that one. Like, good Lord, I still remember listening to that one. I was on my way to Disneyland with the family. And I was like, wow, $25. And Palantir was like $19 running into the $20 range. Everyone got super excited. Then it ripped everyone's faces off and pulled back to $15. And then people got bearish again. That was the last time you saw like $15, $16. And ZETA is not the next Palantir, guys. Palantir is next Palantir. Okay. Like there is no other Palantir in the world. ZETA is not a Palantir. They don't grow at 70% for all the way from 15% growth. They're not that profitable, at least not right now. They're definitely not the AI platform of all software in the entire world. They are not, okay? But ZETA is unjustifiably being sold, in my opinion, and I think it is great opportunity. Look at that. The Qs are recovering. Is today a technical bottom? Am I the one that got Amit and his friends pumping ZETA? Dude, why you gotta say pumping? Why? Why I gotta do that to your boy? Yes, I'm the one who got him to pump ZETA. I'm just kidding around. No, man. Amit does his due diligence, and I think Amit was talking to Ron. Like Amit does that show with Stock Talk. I forgot what it's called. Stock something weekly. And he did with Ron, and Amit got sold. I mean, obviously Amit does his due diligence. And guys, I'm not a stock guru. I'm very far from a stock guru. In fact, I mean, one of the best stock pickers I know personally, Stock Talk, which I do want to get on this week if he's available. He's on Stocks and Spaces. I'll probably hop in there and ask him publicly. But guys, Amit's in a lot of the stocks that I own. And it's not because like I'm some sort of guru. It's because like these are opportunities in the stock market, and some of them some of them haven't turned out so well. There's this like Southeast Asian company called like I don't want to say the name, but like starts with a G, ends in a B, rhymes with Brab, ends in a B. Second letter's an R, third letter's an A. I don't know. I don't forget what it's called, but I mean, that's obviously not doing too good, and Rubrik's not doing good, guys. What can I say? Like we can't capture everything, but this is the reason why position size. I mean, arguably, ZETA is just fundamentally, financially, secularly on a sector trend. It's being thrown away in the software basket right now. And I just remain bullish. I just remain bullish ZETA, and I will continue to remain bullish. It's a core position of mine. And, it's not a path for me. It's not a UI path where it was probably more of a trade. Oh, shoot. Wait, is that the page that I know? I don't know, but shout out to you anyway. No, hey, why I gotta do that, guys? No. You don't call me out like that, but it's all good. It's all good. But I'm bullish ZETA. So we are sitting here at about 43 minutes. I want to, where was that? I had a clip that I wanted to play yesterday. Yeah. I could have been a bit more prepared in this stream today, but obviously I was looking at some charts this morning. Again, when the market moves, so I usually do the chart looking at and everything like after hours or whatever, but like there was so much happening in the market this morning that I had to focus if I was going to hone in on something. Interesting. So I can't find it, but I want to play this clip. Ooh, markets are recovering pretty nicely. We have AMD earnings today after hours. So I am not going to be streaming the AMD earnings. Amit's probably going to be doing that. Super Micro earnings as well. Take-Two, Electronic Arts, which is already getting acquired. So that does not matter. Is it getting acquired still? Yeah, it's still sitting around $200. Enphase. Guys, shout out if you're at Enphase. Like that's some serious conviction. I don't know. Oh, wow. Congratulations, sir. You welcome to the bag holding club. I am part of that bag holding. I'm probably one of the largest bag holders of the stock right now, but yeah, I'm a bag holder. I forgot what I was gonna do today. Galaxy actually reported earnings today. I didn't check on Galaxy. Yeah, I'm gonna be cutting the stream soon, probably in like 5 minutes. Yikes! Oh wow. Okay, I'm gonna pretend that didn't happen. Where is that clip that I was gonna play? Let me just look for it real quick. No, it's not that one. Oh, Tara Wolf. Oh, wow. Tara Wolf, I think Tara Wolf had a talk this morning. Not really interested in that one. Where was it? Disney's naming a new CEO. I can't find it. Here we go. Okay, Mr. Warren Pies. All right, guys. I'm gonna play a clip for you from Warren Pies, head of 314 research, 314 research. This guy's a true G. I would love to get Warren Pies on this podcast one time. The guy is the freaking man. Come on earlier in the day if you can. I can't, man. I'm on literally during my lunch hour. I can't. I wish I could. I wish I could come in and stream all day, but I can't. I would love to do this. Full time, but I just cannot. Family, kids, responsibilities, and then of course I got to go back to work. But let me play this real quick.
Fan of the president's pick, 314 Research co-founder Warren Pies writing on X that Kevin Warsh was the worst pick of the four candidates and will not garner trust from the market. Warren joins us this morning to talk more about that. Warren, appreciate the time. As always, good to see you.
Good to see you.
You're not alone either. I think RenMac has been fairly critical. What do you think is the problem with this pick?
Yeah, I as I laid out there, I think that he is working at cross purposes with what Trump ultimately has stated goals, which is get rates lower. I think that ultimately Warsh is going to, he hurts Fed independence. I think that's number one, and that's his track record that I referenced in that tweet, which is that he has a history of being wrong, and usually on the hawkish side. He was too hawkish going into the GFC. He was hawkish coming out of the GFC, and then come 2024, he flips dovish. I think that hurts his credibility and his independence, and that flows through as less trust in the market and a higher term premium. I think the second thing, kind of related to that, would be he's gonna have a hard time, given that track record, building consensus. Ultimately, he's going to take a consensus to cut rates. So whenever, I think that the rough path for rate cuts is still going to be intact. But when you get to a marginal case, is he going to be able to drag those other independent Fed governors and voting members over the finish line to build consensus? I think that his track record and the way people are looking at him skeptically hurts his ability to do that. And then the third thing, which I think is related to Trump's pick and why I think it might end up being an own goal for Trump, is that you look at the market. I think the market looks at him and says, okay, he's had all this rhetoric about shrinking the Fed's balance sheet. And one way that they're looking at that is saying, well, maybe he can't shrink the balance sheet right now, but come the next crisis, will he be very slow to expand the balance sheet? You might have a view that that's a good thing or a bad thing, but ultimately from the market's viewpoint, that lowers the Fed put somewhat. It makes it a harder bar to clear for the Fed to get involved if there is a crisis. So when I look at all that, I see higher rates, less credibility, and ultimately a lower Fed put. And those things, I don't know if Trump knew he was getting all that with Warsh.
Right. When you say higher rates, I assume you mean a steeper curve, right? More emphasis on the long end?
Correct. Yeah. I mean, even if he gets cuts, there's the yield curve and term premium are kind of synonymous in my view. And so as trust goes down, term premium goes up. Another way of saying that is the yield curve steepens, and we've seen that reaction in the market since Trump officially nominated him.
Let's talk about vendor financing, because that has...
All right. So that is it with that vendor financing. Hold on. I'm going to look at something because I don't want this to play in the background real quick. Yeah, the clip from Jensen one from 3 months ago talking about circular financing just came on as the next one. That's like pretty funny because I remember watching that and like things have really changed. That was when Jensen Wong was talking about OpenAI and like trying to cover them today. It's like completely different. But yeah, pick up the kids after school. Bye. Yeah, you know, these kids can pick up themselves. Like, I don't know, like so selfish. You know, these kids, like they come into my life, they take my money, take my food, and then I gotta pay for them and stuff. And like all they do is just scream at me. So selfish. No, I'm just kidding, man. I love those kids. I love it. Shout out to all the parents out there. It is not easy. It's not easy. And you know what's not easy? Actually, you know, it's not easy being a mom. I'm not a mom, and shout out to all the moms out there. Like, I gotta be honest, my wife, she's a freaking superhero. So shout out to her. And I tell her that all the time, but I'm always wrong. But I think I'm right with that one. So I think if I tell her that, then I'm technically right. So, you know, because she's not going to say that I'm wrong if I tell her that. But anyways, yeah, welcome bag holder. Yeah, welcome to the ZETA bag holding club. You're our number one customer. Can you imagine you with that? Oh, yeah, I can't imagine myself without kids, man. Like I was actually just telling my wife, actually I tell her all the time, but I was like telling her like the other month that you bring it up. Like I don't remember what life was like before my kids were born. I don't we've obviously had lives before our kids were born. And while we're together, like we've traveled a lot and we continue to travel a lot. We're actually going to Egypt and Jordan in a couple of months. So it might take a little bit of a hiatus from the show, probably like a 2-week break from the show. Yeah, like we've been on many trips without the kids before they were born, obviously. And even with the kids, like we went to Italy and Greece, and we also been to Spain, like within the last 12 months. And you know, it's not easy trips, guys. It's not easy trips. And like, but you develop like wonderful memories. The thing is like before that, we've been to Turkey and we've been to Switzerland and everything before that. Actually, no, I'm trying to remember which trip. See, like, this is the thing. Like it's hard for me to remember things before the kids because it's like, they're so ingrained in my life that, you know, I wouldn't want to go back and be like, I wish I had those kids, but I think we are some of what we are today based on our previous experiences. But I don't remember. Like, I kind of remember what life was like before kids, but it's just like, you know, it's different. Like, it just feels different. It's not like they're never born. Like, they're obviously never born, but at the same time, like, it doesn't feel like they were missing from the situation, but it just feels weird just thinking about it and like being present in the moment. Because today, like, I can't even imagine what it's like to not have kids. I can't. And I would never, ever want that be taken away from me. So, you know, my heart goes out there for people who are forced to go through that. But during the meetup, I met a lot of parents there whose kids were like 20 years and older. And they all say the same thing. They all always say there's like this like tier of being an adult. Like, you have your kids where it's physically taxing, and then they get older and they become emotionally taxing when they're teenagers. And then when they graduate, they leave, they become financially taxing. So, you know, it's like, it's never going to end, you know, and that's something that, you know, you have to deal with as a parent. But yeah, shout out to the parents out there and shout out to the moms out there. Like, they don't get enough respect. And even the housewives out there, you know, my wife's a working mom. Very common nowadays, but like, even the housewives, dude, I don't care what you say. Being a full-time mom is a lot of freaking work. And I would rather work than be a full-time mom, because that's how hard that stuff is. But yeah, hey, no problem, Jody. Thanks for coming. Appreciate you, June. Thank you very much, sir. Appreciate it. Little kid problem, big kids, big problems. So yeah, man, you probably know what I'm talking about. You look like a dad over there. I'm not saying that because you're bald. I'm saying that because you look like you got them experience there. But hey, still looking good. Still looking beautiful, man. You're still looking beautiful, so don't worry. I would love to go to Israel one time, but that's obviously not a next trip. And I don't think you can. Not so much anymore, because the passports now, they don't have the stamps on them as much anymore. Some of them are digitized. But from what I heard before is that you can't go to like a certain country and then go to Israel. Like, they'll deny you, or like vice versa, or like some crazy situation like that. I forget like which country it was. Like, if you were to go from like Israel to Dubai or something, like, they'll give you crap. I don't know. Like, that's what I heard what it was like 10 years ago. But you know, I don't think I need to worry about that right now because a lot of the passwords are digitized. We live in this current economy. Like, I'm not going to Iran anytime soon. I don't think it's probably a good idea for me that they're going to take me off the plane and probably like put me somewhere, guys. Like, I blend in like so strong in like those in some of these Middle Eastern countries that like people come up to me asking me for directions. And I mean, it works out in my favor sometimes, but sometimes it doesn't. Let's just say around 9/11, it was not a fun time for myself. I hear being 51-year-old with 3-year-old and full-time day and night shifts is rough. Trust me, especially in months. Dude, you know, you know, all the power to you, Midwest man. You're the man. I mean, you've always been the man. You're an OG. You and a few people are OGs. It's not credible, unfortunately. I mean, you know, it's subjective, but everyone's entitled to their own opinion, so that's good. Your wife rocks. Yeah, man, your wife rocks. And I'm not saying that for first-hand experience. I'm only saying it because you're saying it. I'm sure that she is. But anyways, guys, hitting up over here. 12:48. Appreciate you having you guys on here. I think I hit all the notes over here. I talked about all the key items, and I want to get Chris Patel and do another Hidden Edge. I'm going to see if he's available tonight to do like a long Hidden Edge podcast episode, maybe like a 2-hour crazy one. But we'll see. And I might have some good news to say to you guys soon, but still working on that in the background. But appreciate you guys. Thanks for tuning in. Let's see if the markets continue its upwards momentum. And let's hopefully let's bottom here for a little bit, but things are looking pretty nice right now. Things are coming back. I don't know what happened earlier today, but you have the Qs basically recovering. The 100-day moving average got kind of scary. SPY is back above the 50-day moving average, which is good. So things are looking better. We'll see what happens. Play it day by day. Otherwise,